What's up everybody, welcome back to AZ Trading, hope you're all doing very well. And this video will be in a slightly different format, so please let me know in the comments if you find this type of video helpful. So I'll just go over the trade in question. So yesterday on the 26th of October on the Dow Jones, we've really been milking this market recently and we've managed to capture another 250 points. However, in hindsight, if we were a bit more clever, we could have caught an extra 60 or so more points. And as you can see, we took a few partials along the way with our stop loss at break even and hopes for price to pump to the moon. And when I woke up, our position was in fact stopped out at break even. But overall, if you ask me, still a pretty nice trade. So the way I wanted to structure this video was on our Discord server. You know, I like to post some exercises before I post a video on my thoughts. And usually I like to leave a few questions and would give you guys an idea of what I was thinking before the trade and during the trade. So I've left a few questions here and I've provided a little link to this naked chart. So for the first question, just to outline the bullish RMR pattern, and this is the primary pattern that we trade in all of our videos. So if we have a look at price down here, as soon as price breaks through some lows, we can call this the raid. But after the raid, we need to see a market structure shift. So after this bearish raid, we didn't see a market structure shift. So this is not the raid we're looking for. However, the next raid down here, once price breaks through these lows, we can see a market structure shift breaking some swing highs. So this bearish leg over here, this is what we can call the raid. And we've just outlined the market structure shift as well. So after the raid, a bullish market structure shift breaking some swing highs. This is the market structure shift leg. And finally, we look for the third part, which is the return area. And in most cases, during this bullish market structure shift, we'll be presented a gap. So right over here, if we extend that one to the right, I've just zoomed into the 1 minute chart, and you can imagine when price is up over here, we don't want to be placing longs up here. This is not a very good price. And so that's the exact purpose of this return area, which means we have to wait for price to retrace into this area before we can participate and place a long entry. So you can see how the RMR pattern is very selective. It doesn't just require one step before you can place a trade. There's multiple steps. There's a raid, there's a shift, there's a return, and then you can place an entry. So having such a systematic rule-based strategy will no doubt improve the selectivity of your trades. And if you have better selectivity, chances are your win rate will increase. You'll learn to become more patient to find setups, and your trading will become much more systematic and less emotion-based, which is essentially the goal. We want to become as robotic as possible with our trading because the market is designed to induce emotion in us, and we all know that emotions and trading are not a very good mix. Sorry if you guys hear some police noises in the background. I think there's a high-speed chase. But on to the second question, I said to outline the stop loss and some potential objectives. And of course, when you place your entry, you can never forget about your stop loss. There's no point doing a soft stop loss. Always do a limit order, so a hard stop. And in most cases, your stop loss will be at the bottom of the raid, which is over here. But if you're after a more aggressive stop loss, you can put it below the return area. However, this is more aggressive and you're more likely to be stopped out. So for the majority of the time, I always stick with the bottom of the raid. And just as a potential objective, let's say we've placed our order right there when price is retraced into the gap. A very logical area to take off a partial is areas of liquidity. So we have this swing high over here. Once price reaches that first swing high, we can take off our first partial. Alright, so that covers the easy questions. Let's move on to the slightly harder ones. And these questions will help determine why my bias was bullish for the day. So firstly, I mentioned to comment on the sentiment prior to 9:30. So if we scroll to 9:30, which is right over here, and we have a look at what the sentiment was like for New York, we can see that price is quite obviously turned into a bearish trend. And when the trends are so obvious, we know that sell side liquidity or liquidity underneath the market is constantly being taken out. However, the liquidity above the market is constantly being left untouched. So when the sentiment is bearish, we can anticipate a bullish movement to stop out all the retail traders that are placing shorts with their stop losses at swing highs, since there'll be plenty of liquidity above these swing highs and price will likely take out the sentiment by stopping out these shorters. And just in hindsight, we can see that all these shorters with their stop losses at swing highs, they were most definitely stopped out. So just with that in mind, if we have a bearish sentiment, I'd look for a bullish RMR pattern. And in the first few questions, we saw this bullish RMR pattern that led to an entry to capture a bullish move. And you all know that I love to use correlating markets to find similar objectives. So for example, we know that the indices like to move together. So if they all have objectives above, that would be a correlating objective. So if we're looking for a bullish move, we need to find objectives above for correlating markets. So first, let's have a look at Euro USD. And if indices we expect bullishness, Euro USD, we need to see objectives above as well. So we're here on the Euro USD. I'll just draw a line at 930 and let's have a look if we see objectives above. We have this swing high here. However, if I zoom out a bit more, and when I mean a bit more, I'm on a 4-hour chart now, so we're on a big boy chart. This swing high over here is not just any swing high, but is also a relative equal high on the 4-hour chart, which means that resting above this swing high is plenty of liquidity, which means it is a very likely objective. So if I scroll that one all the way to the right, at the time of 930, we have this very clean objective above, and this is what we call a correlating objective for the indices. So if Euro USD wants to go up, and indices also want to go up, they're basically painting the same story. You don't have to use too many correlating markets because it can be overwhelming, but for me, I'm quite used to checking through markets quite quickly, so I'll just go through the ones that I mentioned so you can have a look at what I was thinking before my entry. So next on New Zealand dollar, same thing, we need to see objectives above. So here on NU, we have some equal highs once again, some relative equal highs. But once again, if I zoom out to a big boy chart, they're not just any old equal highs, they're actually 4-hour equal highs once more. So once again, at 930 prior to the trade, we know that plenty liquidity is resting above as a likely objective. So if we expect NU to be bullish, indices are also expected to be bullish. So this is another confluence. Next one is NASDAQ. I'll just go through these ones a bit quickly. And here on the NASDAQ, I've just zoomed out to a 4-hour chart, and you can see that we also have some relative equal highs on the 4-hour chart. And finally, on the S&P, prior to the trade, once again at 930, these relative equal highs up here have been left untouched, so they're a likely objective. So this is an additional confluence for our trade. So far, S&P we have objectives bullish, NASDAQ we have objectives bullish, EU and NU we have objectives bullish. So we can see that the story and our bias is all aligning throughout all the markets, and there's not many conflicting ideas. And these are the types of environments that make your trades very high probability. And just for completion, we know that DXY and USD CAD are inverse towards the indices, so we'll need to see objectives below, like equal lows. And on the DXY, we have some relative equal lows once more. And here on the USD CAD, if I zoom out again to a 4-hour chart, we can see we also have some very clean equal lows as well. So basically, when all these correlating markets have objectives that are in line, that's when our bias becomes very strong and we can look for a setup with more confidence. Since I know a lot of you haven't spent too much time with any specific strategy, so it might be hard to find the confidence to place a trade. However, you can see a way to increase your confidence is to find similar objectives on correlating markets. All right, final 2 questions. These are the bonus questions. So the first one is, why did I long the Dow and why didn't I long the S&P or the NASDAQ? And I've mentioned this a few times in my previous videos, but it's a very easy step. It's just a relative strength analysis. And the more you do it, the easier it becomes. So I'll just draw a fib on the Dow from the bottom of the raid to the top of the market structure shift. And you can see in the return area, the Dow has retraced just above the 62% level, which is a very healthy retracement. Here on the S&P, if I draw the same fib, bottom of the raid, top of the shift, you can see S&P retraced below the 62% level, which means S&P is a little weaker than the Dow. And finally on the NASDAQ, bottom of the raid, top of the shift, and you can also see that on the NASDAQ, price has retraced below the 62% level. So NASDAQ below 62, S&P below 62, and Dow above 62. Very simple step, and we can tell that the Dow at that time of the entry was currently the strongest, and that is the reason why I long the Dow. It's not because I love the Dow more than the S&P or more than the NASDAQ. It's based on logic and it's based on price. All right, final question is just about some potential areas to take off your partials. And as we mentioned before, the first partial was at this swing high, which is very logical. But what about this partial over here? If I zoom out to the left, there's nothing there. So why did I take off something here? If we look at a correlating market like the S&P, we can see that as soon as the S&P broke that previous day high over here, this would be an area of liquidity, and that was at 1040. And on the Dow, exactly at 1040, we can see that that's when I took off a partial on the Dow. And you know, at this point, I reduced my stop loss to break even and just let my trade run. But I ended up missing out on an extra 60 or 70 points. But if you are very clever, let's do a little hindsight review, and we can see that on the NASDAQ, if I zoom out to the left, we have this very clear gap over here. And as soon as that gap was filled at 1130, with the benefit of hindsight, exactly at 1130, if we took off a partial right over here, we would be able to capture that extra 60 points or so. But of course, we didn't manage to do that. price dumped, got stopped out break even, and that's that. Let's move on. Alright guys, that'll be it for this trade. I hope you enjoyed this type of video. Please let me know in the comments if you did. And I'll just turn off all the annotations so you can take a naked screenshot if you'd like to outline the RMR yourselves. But other than that guys, I hope you guys learned something new or something that I said helps with your trading. Please leave a like and subscribe if you'd like to see more content from me. It makes me very happy. But until next time, take care everyone. Peace.